Adam Gant, U.S. real estate did fairly well in 2012, up double digits. How did Canadian real estate ventures do in 2012, and what's your expectations for 2013?
Well, Canadian real estate did fairly well in 2012 also. We saw some good cap rate compression, specifically at the beginning of the year. I'd say the tail end of the year here has been very stable. We saw some modest rental rate increases. We're primarily focused on retail shopping centers, and we saw some modest rental rate increases, same store over store numbers for this year so far.
How tightly correlated are the U.S. and Canadian markets?
Good question. I don't think I could give you the actual number of the correlation factor, but I do see the consumer confidence index numbers being fairly close, certainly in the last year, as the U.S. consumer confidence numbers have picked up quite a bit, and actually today are trending at higher than they've ever been the last 4 years. Canada's been pretty stable, but they're both coming in around 70 to 73. And so I think they are becoming a little bit more correlated. 3 or 4 years ago, there was quite a divergence in, especially the retail space that we exist in, as there's many more retailers of the same kind, of the same store type in the U.S. And Canada just didn't see the number of retailers go away that happened in the U.S.
Well, how is retail in Canada? Are they paying their rents? Are you seeing opportunities? If so, where? And what type of retailer?
Well, we're definitely seeing opportunities, and we're focused primarily on necessity-based retailers. We like the defensive play of having that very stable income stream. I think the neat thing for us is seeing many of the U.S. retailers come up to Canada and start to force some of the existing Canadian incumbents to defend their territory, open up new stores where they didn't have exposure before, to really lock in their customer base. So that's creating some opportunities for us as landlords, buying properties where we can put a new U.S. retailer in, redevelop that property, and increase the value.
One of the big problems that U.S. REITs are facing is the fact that anchor tenants, department stores, maybe a Best Buy, they're hurting because online sales are growing and that's stealing money away from the big box players. Are you finding that up there, and how are you dealing with it?
I think we're finding it probably to a lesser degree. Canada's got a number of kind of what I would consider as multi-class or multi-sector retailers. Like one, for a good example, is Canadian Tire, that actually has a few different formats in one store, primarily because the size of the market isn't big enough to warrant having them all specialized. So I think we're certainly seeing the Best Buys and Future Shops not adding a whole bunch of new stores and really being selective of where they grow. We happen to focus more on the grocery-anchored, drug-anchored stores, things like Walmart, where you're a little bit less susceptible to the online retailer impact.
Like the things that are happening at JCPenney and Sears. You're less focused on that.
Absolutely, yeah. We don't really have a number of centers that would be considered large enclosed regional malls with those traditional general merchandisers.
And finally, is it a smart maneuver for U.S. investors to invest in Canadian real estate? What are the tax consequences? Not a lot of people do it, and it's also different with a REIT as well.
I think that's a great question. I think right now there are probably fewer opportunities. Partners REIT is a great one because we recently got listed and quoted on the OTCQX exchange, which is great to be able to own Partners REIT in U.S. currency, and at the same time it's very easy to trade. I think one of the key things is that in Canada, we can float depreciation to reduce the amount of tax that you would pay on your income stream that you're getting. And in our case, we have 100% of our distributions being covered, so there's no withholding tax. So the distribution flows out whole to the U.S. investor.